Hey everyone, welcome back to Corporate Decoder, the place where we break down the often confusing world of corporate filings. Today, we are diving into a Form 8K from Aeluma Inc., which sounds like something out of a sci-fi movie but is actually about money changing hands. Will it be a blockbuster or a box office bomb? Let's find out. Basically, an 8K is like a corporate breaking news alert. Companies use it to tell investors about big events that could affect their stock. This one was filed in late March of 2025, with the earliest event happening a few days earlier. Okay, the main event, the company signed what's called an underwriting agreement. Think of it as a deal with a financial middleman, Craig-Hallum Capital Group LLC, to sell shares to the public. This is related to a public offering of stock. Basically, Aeluma is selling a chunk of its company to raise money. They offered $2,000 each. They also gave the underwriter the option to sell even more shares if there was enough demand, and guess what? That option was used in fully 5, closed on March 28, 2025. If offered 2,255.25 each, they also to a fublet 25.55 each. They also gave the underwriter the option to sell even 4 shares if there was enough demand, and guess what? That option was used in fully closed on March 28 to 5,714 shares at a price of 5.25 each. They also gave the underwriter the option to sell even higher shares if there was enough demand, and guess what? That option 25.5. These shares were offered under a registration statement that the SEC, the government agency that oversees the stock market, declared effective. This just means the company followed all the rules to legally sell these shares. Alright, time for the big numbers. The company raised around $13.8 million before paying fees and expenses. After those expenses, they're left with roughly $12.7 million. So what are they going to do with all that cash? They want to expand their business development efforts, which likely means hiring more people and marketing their products more aggressively. They also want to improve their manufacturing processes to boost commercialization. And of course, some of the money will just go towards general business needs. Now, about that underwriting agreement, the company agreed to pay the underwriter a 7% discount on each share. That's the underwriter's cut. They also issued warrants, which are like coupons that allow the underwriter to buy even more stock in the future at a set price. They'll also cover the underwriter's expenses up to $125,000. This is important. Company leaders like officers and directors have agreed not to sell their own shares for a certain period of time, 90 days after the offering closed. This is called a lockup agreement. It keeps them from flooding the market with more stock and potentially driving the price down. The company also agreed to something similar. Now, there's a little wiggle room in these lockup agreements. The underwriter can choose to release some or all of the locked up shares early, but they don't have to. If you really want to dive into the details, you can check out the actual underwriting agreement and warrant that the company filed as exhibits with this report. This part is more about keeping everyone informed. Aeluma's stock used to be traded on a smaller market called the OTCQB. Now it's been approved to list on the Nasdaq Capital Market, which is a bigger, more well-known exchange. It started trading there on March 27, 2025. The company also issued a press release about the pricing of the offering, basically telling the world how much the shares would cost. Another press release was issued about the closing of the offering. Again, these press releases are attached as exhibits if you're really curious. And finally, this item lists all the exhibits filed with this report. So what's the big picture here? Aeluma Inc. just raised a significant amount of money by selling stock to the public. This money will help them grow their business and improve their products. They've also taken steps to ensure that the market isn't flooded with shares, which could negatively impact the stock price. Now let's put on our analysis hats. Aeluma is definitely in a growth phase. They're raising money to expand, improve, and commercialize. Listing on the Nasdaq is a big step up and can attract more investors. The risk here is whether they can effectively use that $12.7 million. Expanding and improving cost money, and there's no guarantee that these investments will pay off. If they can't turn that cash into revenue and profits, the stock price could suffer. Overall, this 8K tells a story of ambition and growth. Aeluma has taken a big swing, and whether it's a home run or a strikeout remains to be seen. But they are in a better spot than before this offering. Thanks for watching. If you found this decoder useful, be sure to like, comment, and subscribe for more breakdowns of the corporate world.